Hello everybody, I think we're ready to go. Just hold on a second. So welcome to this week's live stream. For those of you who haven't seen it before, do this every Friday normally at 2:30 UK time. A quick look at some of the major news announcements for next week, what to watch out for. We've got the payrolls this time next Friday, or 1:30 next Friday. And then we'll jump onto the charts and take a look at markets in a bit more detail. It's been a tough week for me this week. I'll take you through some of the numbers for me for the month, for my own trading. I think I do try and show the reality of trading on this channel, the highs and lows, and it has been getting back a lot of profit this week, but I'll talk about that in a second when we start looking at the markets. But before we get into it, let's just go through a risk warning. This presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments and for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Right, so next week, the big one is arguably next Friday, which is the US non-farm payrolls, 1:30 UK time next Friday, so I'll be on at 2:30. We'll see how the markets are reacting to that. But on Monday, we also have a speech from the head of the US Central Bank, the Fed, Mr. Powell. See what he's got to say about maybe the future of interest rates and their feelings on the US economy. So we could see some volatility on Monday. Then Tuesday, we've got the Aussie interest rate decision, and Wednesday we've got the Kiwi, the New Zealand interest rate decision, and then on Friday we have those non-farm payrolls. So yeah, not as busy as the last couple of weeks, but the payrolls on Friday is really the big one. So let's see what that looks like. A very quick whiz through some of the other stuff that I do. I'm on a bit of a tight schedule today, so I'll go through it quickly. I run a trading course. You can find out all the details on my website, which I'll show you in a minute. Two approaches I go through: medium-term trading and shorter-term trading. I've been running it for a few years. From November to January last year to January this year, I ran an account that I talked about on YouTube using the approaches I talk about on the course. That account made, you can see the profit here, it was a £4,000 account, made just under £2,200 during that period. I did it again in May to July this year. The profits, it was a £5,000 account this time round. The profits were 3,100 booked profits. There you can see the P&L down there over that period, again using the approaches I talk about on the course. And the reason I show these numbers, I think when it comes to trading and trading education, lots of people want to find out how trading works, and there are lots of what I would say courses and people out there who sell the dream, who don't show what the reality is of trading. And I think if you show the reality, you've got to show the numbers. You've got to go through real trades and show it as you're going along, to try and establish credibility. So that's why I did these two open trading periods. There's a WhatsApp group I run, daily update, markets I'm watching, trades I'm running, Q&A. If you'd like to subscribe to that, it's and you use the code YouTube, you get 20% off the first month. I've had a couple of days off it the last couple of days, and I'll show you why in a second, because I'm having a bit of a break the last couple of days, the end of the month. But usually it's an update from me in the morning, what I think is interesting, and what trades I'm looking about, and then general chat throughout the day. I'm not a really short-term trader. I do maybe 3 to 5 trades a week. I don't believe in sitting there watching the screen all the time, but you can try it out. That's a screenshot of an update from me, a typical update from me in the morning. So the trading course has got 5-star Trustpilot reviews, which I'm very grateful of. You can have a look at those on Trustpilot. There's a newsletter I send out every week, which is free of charge. If you go to the website, davidjonestrading.co.uk. The first page you land on, there should be a box in there for the newsletter. So if you haven't signed up for it, sign up for that. And it's what's going on in markets, what am I trading, what am I looking at, and a trading tip, a strategy tip. And it's all on the website, davidjonestrading.co.uk. Okay, there we go. Right, let's get into it. Let me show you why I've had a tough week this week. Because, like I say, I think it's important to do the highs and lows of trading. So that page I showed you, this public trading thing I did, from, where's it gone? From May to July on this £5,000 account, booked profits of 3,116. So it was a good return on the account, about 60% or so on the account over that period. I have to say, of course, that past performance is no guarantee of future performance, but it was a good run over those few months. I've carried on trading that account. I have my own account, and I carried on trading that account as well, which I'm always happy to talk about publicly. These are the numbers for September. So in September, the month hasn't ended yet, but we're nearly at the end of the month. So booked profit, you can see down here, £810 on the month. My win rate has dropped, so 48%. So less than half of my trades were profitable in September, which is the worst run I've had, I think, for some time in a month, in a whole calendar month, but whatever. So 48% of trades were profitable, but it still made money. Okay, and again, this is a really important thing about trading. You don't want a strategy where you have to be right 70% of the time to break even. So for me, the risk reward is always a really important number. So my risk reward on the trades done in September was 1.39. So what that means is if I lost 100 quid on a trade when I was wrong, when I was right, I'd made 139 quid on a trade. So my profits are bigger than my losses. But the challenge this week, I came into the week up about 1,700 quid for the month on this account that I talk about and sort of do for these. It's real money, this account. It's not my normal, usual trading account, but it's one I use to show, how I trade. So I came into this week up about 1,700 quid, 1,770 I think I was on this account. So I've given back half the profit this week. So it's been a tough week. Doesn't happen very often, but of course it can happen. I was just the wrong side of some moves in the market over the last week. So I'm still profitable for the month, but from a psychological point of view, it's a bit of a pain, let's say, to give back a chunk of profit over the last week. So it has been a tough week. So I'm looking forward to wiping the slate clean for September, profitable month, and then starting again in October, starting from scratch. Let's see how it goes. But I do that because I think it's important to understand that trading is not all unicorns and butterflies, where you log in every day and your account just grows day by day by day. Now and again, you're going to take a big hit, and I took a big hit over the last week. Still profitable for the month, but give back a chunk of profits. There we go. Anyway, let's get into it. So, let's talk about stock markets. I think this is interesting. This is the S&P. I was trying to get short the S&P on the hourlies. The frustrating thing for me in the month. I was trying to get short from about the middle of September, the S&P, and it just never rallied enough for me to go short. It was really falling off a cliff. So I didn't catch any of this move on the way down on the hourlies. But what's interesting is the last couple of days. If we go back to the beginning of October last year, or middle of October last year, so nearly 12 months ago now, we had that low in place on the S&P, down around 3,500. And of course, that was the start. We didn't know about then, or I didn't know about then. That was the start of the trend that we've been in for all of this year. And over the last, couple of months now, we've seen this market come back to the trend line. So is this the third touch of the trend? And away we go, ba-bang, back up to the highs. I am still bullish on the S&P. I wonder, is it going to have another little look at those lows next week? It's rare that markets make a handbrake turn. If we go back to major lows before, we had quite a bit of back and forth. Actually, this is last year, December last year into Jan. A bit of chop for a week and a half on March, the last major sell-off. bit of chop here. Let's see. And again, actually, back in August, market sells off, rallies, bounce, comes back, holds, and then moves a bit higher. So I think it's going to be interesting next week, particularly with this Fed speech on whenever it is, Monday. I think perhaps we could see this market still under a little bit of pressure, but big picture view, really interesting down here. Because if this is the place it's going to turn around, then we're here. I think I did a video on the channel on the S&P earlier this week, a couple of days ago, I think it was. Let me find it. Here we go. Worst month this year. So the September has been the worst month for the S&P. Put a bear in the thumbnail, obviously, for the old clickability. Bit of clickbait. Is it the start of a bear market? I don't think it is yet, while this big level holds. So let's see how it turns out. So really interesting, I think, the S&P going into next week. So for me, from a medium term point of view, I would like to be a buyer. I want to be perhaps a little bit patient, but if I was a buyer, the absolute closest my stop is going to go for a medium term trade is under the low from Wednesday, which is 42.36. In reality, I'd have it wider than that. So I'm going to watch this very closely next week, and perhaps there's a medium term trade in there. Here's the Nasdaq. Nasdaq hasn't been hit on the face of it as much as the S&P. You know, we've got our uptrend on the Nasdaq, looks like that. It has had a little drift below that trend line that I've picked up on from the lows for this year, but we're still above this 14.2 level on the Nasdaq, the lows from early June. So again, you know, both these markets I think are interesting, very interesting going into next week. Let's see how it turns out. DAX, German DAX, this was a big level, 15,450. It slipped below it, it's bounced, it did slip to its lowest since March of this year. Are we going to see a recovery? I don't know. You could argue on the DAX that the trend off those highs is still very much down. Let's see what happens. So I'm not as interested in the DAX as I am in the US markets. So let's see. FTSE, a bit scrapperama. FTSE's sort of done its own thing this year, sideways overall, as you can see. I didn't do the trade this week. It's always, of course, when you're having a bad time, it's always the trades you don't do that would have worked sort of okay. I was thinking about going short the FTSE when it rallied up to 7,700, just because this had been a problem area. I didn't do the trade anyway. But just a bit chop, not too exciting for me on the FTSE for next week. And Japanese market, I think that's interesting. The Nikkei 225. So we had this good run in the Nikkei off the Jan lows, bang, bang, bang. Accelerates from March. We've been in this sort of corrective phase since then. Is that corrective phase over? I'd probably bet that it is. So for me, perhaps the interesting trade for the Nikkei for next week, depending on what happens. Again, this is all based off the daily charts for now. Do I want to be a buyer? So it finished today, or it's trading in the out of hours if it's still trading around 32,000. We had that low in at 31,250 from mid-August. Is that going to end up being a platform for the next move higher for the Nikkei? Anyway, I think that's the interesting level to watch, 31,250 on the Nikkei. So let's see how that goes. But for me, absolutely, S&P and Nasdaq are the main markets to watch next week for me. So let's see. Other markets, dollar, we've seen, I did buy the dollar this week. I bought the breakout. I'm about 30 points the wrong way on that at the moment. But dollar index did punch up on Wednesday of this week to its best levels since, got to go back to November last year. So we had a 10-month high on the dollar index. And again, I thought it's interesting. It's almost it feels like there is there has been a lot of fear in the markets. You know, we've had stock markets sliding quite heavily. We've had the dollar. This run on the dollar index has been a really solid one for the last 2 months. You know, it's the classic almost flight to safety. You know, we saw it on the way up. Here we go in the dollar. When there were concerns about inflation and all of that, we had a great run for the US dollar into September last year, so 12 months ago. And then the market sold off as investors embraced risk again, and we saw traditional risk assets like stock markets move higher. So I think it's quite interesting what's going on. Is the market really still quite worried because inflation is perhaps being a bit more stubborn? I don't know, but I thought it was interesting. And that dollar index, I'd be a buyer of the dollar index. The trend is up. If I was a buyer off the dailies, I would probably want my stop where that line is, 104.42. Let's see. Can I make the font a bit bigger so it's clearer? There we go. So 104, the other side of 104.42. So I think that's an interesting market to watch next week, the dollar index. Then we come into some of the FX markets. I mean, I was long the euro off a short-term trade, sort of in here, ahead of 106, and it did okay for a bit until it didn't. But euro against the US dollar, if you look at the trend here, that is still down. And we're back to this big level. These lows are the lows for the year. What's the level? 104.80, something like that. So that's going to be really interesting next week. Do we see the euro start to turn around here? Or after this little bounce higher of the last couple of days, do we see it come under pressure and slip down again? Let's see. Let's see what happens over the next week. But some big levels on the dailies there. We could say similar thing for pound against the dollar. We've seen the pound go from 131 in July to 121 just this week. So what's that? It's a 1,000-point drop. So it's do the maths quickly, about 7% fall in 2 months. The pound has lost. So again, is this bounce the start of a recovery, or actually is this trend well and truly over? This uptrend in the pound, and this is the new trend for pound against the dollar. So I think that's an interesting one. It's had a bit of a run this morning, pushed a bit higher, and we've seen it get hit a bit in the current hour. Let's see. But for me, it's always difficult when we have trends in markets, and then, as with I think the S&P, well, is this the start of the downtrend ending and the big trend resuming? It's always the difficult bit for me to trade is the turn. So yeah, an interesting couple of weeks to try and figure out, are we going to see these trends continue? So that's a couple of currencies. Let's take a look at oil. I mean, loads of volatility in oil. It had been a good trade for me into September. I closed out, I came out of it about the middle of September, in about here. And it's carried on. We saw oil just yesterday trade to its highest. Where did it get to yesterday? $95.50. And that's the highest it's been since August 2022. So a 13-month high in the price of oil. So it's backing off at the moment. But again, I'd be a buyer. I think because of the volatility in oil, if we look at this, look at the last 3 days in oil, we've seen the market travel from 91, a low of 91 on Wednesday, to 95.5 on Thursday. So we've seen it travel through $4, $4.50. So if we're going to trade something like oil, then it's important we give it some room, because it is nuts volatile at the moment. Just in the last hour or so, it's moved nearly $2. So it's a pretty volatile market. I think it will be interesting if we see it get knocked back down to 90, the oil price. Let's see what happens next week on that. But again, for now, I would be happy to buy a dip in the price of oil, because that trend is still up. So I think that's another interesting market. And it feeds into, going back to stock markets having been weak until a couple of days ago, dollar index having been strong over the last couple of months, price of oil is up, what's it up? About 40% in the last 2 or 3 months. It does feed into inflation still being a problem, and we know that markets do not like inflation, as don't the central banks. So yeah, quite a bit of potential for volatility, I think, into the end of the year. Let's see what happens. But I think it's lots to watch it just in those markets: S&P, dollar index, oil. Loads to watch for me in the next few days. To take a look at some other stuff, natural gas. I don't really have a view or a preference on natural gas. We had this big decline from August of last year, from around $10. The price briefly traded below 2, and since then we've seen it sideways. So it's not a market that has much for me. We're in a sideways range within the bigger sideways range at the moment. So since July, 244 on the bottom, $3 on the top. That's capped the market. It's pretty much in the middle. So there's not a lot for me. Nothing at all for me in natural gas. So, but interesting if it does eventually shake off this sideways range. And then we've got gold. I was long gold as well. Got stopped out of gold. That trade did okay for a bit. So I was in the trade from about here. It was against me. Then it was in my favour, but didn't move enough for me to move the stop to break even, because I've got definite rules for moving the stop. Hadn't moved enough, so it ended up being a loser. And this is where we are. So at the moment, gold is on a 6-month low. So we're back to mid-March levels on gold. For me, it still looks pretty weak. I'd rather sell a rally on the price of gold. So if I picked up on that, if we pick up on the trend from the highs, perhaps look something like that. So for me, if we did get a rally back up to 1900 or thereabouts, perhaps it's a short. It's oversold. If you look at the daily charts, it is oversold on the dailies. The last time it was oversold was back here in August, so only a month ago, 6 weeks ago. And we did see a short-term base. So perhaps, back here we go back to Feb, March, again oversold, and then the market turned around. So perhaps we are going to get a bit of a bounce in gold. But for me, with this support level sort of here getting lost over the last couple of days, I'd rather be a seller of the rallies in the gold price. So I thought that was pretty interesting. But let's see, lots to watch there. As usual, if there's any stuff you want looking at, put it in the chat and we'll take a look at it. To look at some other markets, Bitcoin, we do sort of dip in and out of Bitcoin. Pretty boring still, isn't it? But the trend for this year is still, for me, it's still just about up. As long as 24,750 holds, that trend is still up. So I'll be a buyer of the dips, but it has been, going back to March, pretty boring. Price of Bitcoin. That's what it looks like over the last 6 months or so. So nothing too exciting with that one. And just some other markets, some of the stuff that I look at for medium-term trading and I talk about in the WhatsApp group, some of the agricultural markets have been interesting. So orange juice, for fans of if you're old enough to, like me, have watched Trading Places in the 80s, frozen concentrated orange juice. I don't know if this is frozen, but anyway, the trend has been up. The trend in orange juice has been up since last summer. Broke out recently, pretty volatile couple of days, but broke out recently. So it's an interesting trend there in orange juice. The other market that I think is interesting is cocoa. So cocoa is so all the important breakfast drinks we're going through. Oh, cocoa is evening drink, isn't it? What am I talking about? The trend in cocoa has been up since September last year. It hit a new high for this trend in September, and it's backed off. It's off about 10% off those highs in the last less than couple of weeks or so. But again, this is another interesting one for me. Thinking, is there a dip to be bought here because the big trend is still up? So some of these other markets that aren't that their financials are still quite interesting markets to look at. I'm trying to think if there's anything else. Oats. I've never traded this, but I think it's an interesting one. I think that the spread can be quite wide, but oats. We'd had oats peaked in April last year, sold off. It has had an uptrend. It's fallen out of that uptrend, but it is, still above what I would say is still some important support levels down here. And wheat. I've been short wheat for ages. I can't remember. I think I've been short wheat since about here. And it keeps trying to break lower, and then it doesn't. So it's another, market, perhaps out of the usual stuff that people look at. That's an interesting market out there. But yeah, so to come back to recap, next week the big one for me is this the start of the next big upswing in stock markets. I think I'd be leaning towards yes rather than no, but perhaps we have another little test of these lows first of all. Let's see what happens next week. Dollar index has broken out this week, broken out through those March highs. So we've been on new highs for the year for the dollar index. I'm long. I'd still buy a dip on the dollar index. And the same with oil, broken out to briefly through the highs. And these were sort of a major barrier, October, November highs in oil. And you could take the view, of course, there's always two sides to every market. Maybe you think up here, well, okay, the market has been knocked back up to where it was in November, October. But back then, the view was, well, this is far too expensive. So if you really wanted to go short oil up here, I wouldn't yet personally, but what do I know? Based on this week, not much. But for me, I'd go short with a stop above the most recent high, a stop above 96 maybe, if you thought the price of oil had got too far. So, three major asset classes, S&P, dollar, oil, and all really interesting, I think, in the next week. Let's see what happens. So what we'll do now, we'll jump into the stuff you want looking at. But don't forget, to find out about some of the other stuff I do, go to the website. To join the WhatsApp group, if you use the code YouTube, you get 20% off. The link is in the description, as usual, to this video. It's all on the website, davidjonestrading.co.uk. But let's take a look at some of the stuff you want to look at.
Sorry, I don't know that.
Alexa's getting involved. Does a trailing stop give your strategy a statistical edge over partial exit or just a preferred style? Good question. I have in the past tried partial exits, and by partial exits, I'll tell you what I'm talking about, so we're all on the same page. Let's say you've bought 10 of the S&P and you're in profit. You might decide to close 5 at a certain level, take profits on 5, and then perhaps you take profits of 3 of them at a certain level, so you're left with 2, and then you close the 2 at another level if the trade goes in your favour. I've traded like that in the past, very occasionally, but I don't do that, and I haven't done that for years. So I'm very much all in or all out when it comes to trading. So for me, and I like a trailing stop loss because if you're in a trade like oil, it keeps me in the trade. I did the oil trade. It's not actually in that account I show. It's, of course, Sod's Law. The big winner, I did in a different account because I didn't have enough margin in that account at the time. But anyway, the point is the oil trade. I put the oil trade on back here. Back in August, nearly got stopped out here. So I was in let's say 81. I was in at 81. Nearly got stopped out at 78, but didn't. And the market just ran. And I think I ended up coming out here at 91 or 90, something like that. So we made like $9 on the trade, 10% move, on the trade, on the oil trade. But if I and for me, the trailing stop means I don't look at a market and think, oh, that's gone far enough, I'm going to come out. So it's a very mechanical approach for me, the trailing stop. And what it means is, going back to some of those numbers, I said how important the risk reward is for me. It means that, in a typical month, there might be 1 or 2 trades that make all the difference. And this month, there you go, my best 3 and my worst 3 trades. So the risk in this account at the moment is 350 quid risk per trade. Okay, so if a trade goes wrong, it loses 350 quid. So here are the losers, 350 quid losers. Okay, my biggest winner in September, sterling Aussie. So that made £954, the sterling Aussie trade. So 954 divided by 350. So it made 2.7 times the risk. So for me, in a typical month, there will be a couple of big winners that make 2.5, 3, maybe 4 times the risk in the absolute exceptional. And the trailing stop is a mechanism that keeps me in those trades when they start moving in my favour. And hopefully they develop into a real big winner trade. So for me, there's some trades will make 350, some will lose 350, make, lose, make, lose, make, lose. And hopefully there's a couple of big ones in there that make the month. And that's very much been the pattern of my trading over, the last 5 years or so. Particularly, of course, as I am a trend following trader, if you do manage to latch in to a good trend, like we saw in oil, like we had in the dollar index. The trailing stop, if you've set the trail, the distance, a sensible amount, will keep you in the trade. So that's it. So that's for me. It takes out the emotion and the subjectivity of getting out of a trade. It's absolutely critical for me. The most important bit of a trade, first of all, if I'm going to get in, where does my stop go? So that's the bit that I devote all the time to. And then the next thing, if I get stopped out, I get stopped out. But the next thing is, well, when do I start thinking about moving the stop, and how far away does my stop go? And that's it. That's it really for me in trading. It's as simple, but of course not so simple as that. And that's some of the principles that I talk about on the trading course. So for me, it's it's the absolute cornerstone of my trading, the trailing stop. So does it give me a statistical edge? I think in terms of, it gives me a statistical edge, but not in the way that it means more trades are going to be winners. It gives me the edge if I get into a big trend. And most of the trades I look for, I'm looking to jump on board a trend. So if the market is trending and it's going to carry on trending, the trading stop will keep me in the trade, and hopefully it ends up being a big winner. So I hope that answers your question. Silver. Oh, we didn't look at silver, did we? Silver's interesting, or it was interesting. I haven't looked at it. Yes, it is still interesting. On the dailies, I mean, that is pretty textbook silver. The last couple of days, silver, we've got this trend since September last year, so we're 12 months into this trend. And we're on the trend line. And we've sort of come back to this trend line, near the trend line, a few times since June. And it's holding. So for me, silver can be a bit of a crazy market now and again. Not so much, I suppose, this year. But, we've got, if I was a buyer of silver, wherever it's trading now, $23.16, I'd have a stop under 22. At least under 22. So I think that's an interesting market, silver, because the trend is up. So if I was going to be anything as a trend follower, then I'm going to be a buyer of silver. So yeah, interesting market, that one. How about Ford? So, hang on, I've missed some out, sorry. DAX, we did look at the DAX. Has broken support, the DAX, blah, blah, blah. Did look at that a bit earlier. I might be tempted to sell a rally in the DAX, but I'm a bit sort of not sure which way. So to be honest, I'd be happier looking at the S&P and the NASDAQ than the DAX at the moment. Uber, let's have a look at Uber. We've not looked at those for ages. What does that look like? It's had a really good run this year. What's it done this year then? So we came into this year about $25 and it's at 46, isn't it? So nice trend in Uber. So the trend looks like that was the old trend, and here we are chugging away in the new trend. So it's been a bit sideways over the summer. I would be a buyer. The only question is, do you buy it now? If I was a buyer now, and I don't think I would be, but if I was, I would have my stop at least the other side of $43. I'd much rather see a deeper sell-off. There were some good opportunities to get into this trend. Of course, the old hindsight trades back here at $30 in late April when it came back near the trend line, and it really, really took off from then. So I'd be a buyer. It's just whether I want to buy it up here or do I want to try and wait for a sell-off. So, that's that one. Can we do uranium? I don't know if it has uranium. Let's have a look. We've got the uranium ETF. Wow, that's had a run, hasn't it? See, if you look, so this is the uranium, Global X Uranium ETF, which I'm guessing, does it track the price of uranium or uranium companies? Whatever. If you look at the last 12 months, it's in a sideways trend, isn't it? Actually, the last 2 years this is going back to September 21. So last 2 years we're in a sideways trend, aren't we? And so it's not done a lot. It's had a good run over the last couple of months. But again, the question for me is, would I buy it now? Or if I bought it now, where does my stop go? I don't know. Probably a lot lower than where it is now. It'd be interesting to see what happens up here, around $28.50. It was a problem last year, 18 months ago. So for me, I think it's an interesting chart because of the run it's had over the last 6 months. I would rather buy a dip at the moment. The risk is the dip doesn't dip and I miss out. But I think if we've got a dip, it's maybe a more interesting one for me at the moment. What's that done historically? Oh, wow, it's really... So it was $132 back in Feb. And then $8 in March 2020. So it's really got bombed out, didn't it? Yeah, so an interesting one. Probably not one for me, though, at the moment. Ford Motor Company. Let's have a look at those. They did have a good run, didn't they? But maybe that's going back a while. Yes, I think that was the move I was thinking about. I would buy it. I think. No, I would buy it. If I had to do anything, I'd buy it. So it's been, again, it's pretty sideways, isn't it? If we look at the last 15 months, it's pretty sideways. I mean, it has recently traded down to the bottom of the range-ish, below $12. I would buy it. If I was a buyer down here, I would probably still want my stop the other side of these ultimate lows, around $10.50. But it's not the most exciting thing in the world at the moment, but it is near the bottom of the range, isn't it? So perhaps interesting. PayPal Holdings. I would be looking to go short a rally. So only 2 days ago, it dropped. Has it had earnings or something? No. It dropped to its lowest since about 2017. So we hit a 6-year low. That trend is still down. It has been trying to hold around $58. I'd like to sell a rally in PayPal, would be my approach on that. If we look on the hourlies, no, it's just got really clobbered, hasn't it? So I'd rather, if there was a good rally I wouldn't buy it, but I wouldn't mind seeing a bit of a rally to sell into because it still looks quite weak. Google, I am long Google, so I'm in this one at the moment. I'm long Google. I've been long since about May, I think, or April, can't remember. But I am in that one. I'd buy it. I've got a few messed up trend lines there. You know, it has had this sharper trend. If I was a buyer today of Google Alphabet, I would put my stop loss the other side of wherever it is, 127-ish. And Intel, I haven't looked at those for ages. I've got Intel. And then a buyer, isn't it? That's an interesting one, that. We've had this trend in Intel since March. So it's a buy for me. It hit a new high for that recovery in September, just this month. It's come up about 10%. If I was a buyer, I'd have a stop at least the other side of 31.50. So for me on stocks, you know, I don't worry about the short-term charts. I just look on the daily charts. And going back to that whole trailing stop discussion, I just want to trade with the trends. You know, we've got an obvious trend, I think, on Intel in there. Let's see. What do you think of Elliot Wave? I think it is absolute cobblers, Elliot Wave. I would do my usual disclaimer that ultimately, you know, markets are about making money, and whatever makes you money is the name of the game. Yeah, so if waking up in the morning and tossing if a coin, it lands on heads, you buy the S&P, it lands on tails, you sell the Nasdaq. If that's profitable for you over a 3-year period, for example, more power to you. But Elliot Wave, do you know the problem I have with it? I'll show you now, actually. You have stuff like this. You know, if you're not familiar with Elliot Wave theory, the theory is that markets will have their main trends in waves of 5, 1, 2, 3, 4, 5, as we can see, and they correct in waves of 3, A, B, C correction, and then they'll go on 1, 2, 3, 4, 5, which is all very neat, isn't it? But as we know, markets are not really that neat, are they? So one of the problems I have with Elliot Wave is the amount of subjectivity. Yeah, because the problem is, so we look at something like Intel. Let's do it with Intel. So we might have 1, 2, 3, 4, 5. That's our 5th wave. But if we were looking at it then, we might have said, okay, 1, 2, 3, 4, 5, and now we're going to correct all the way down here. Oh no, that doesn't happen. Oh, actually no, this is wave 3. That's wave number 5. So the problem I have is it's far too easy and confusing to keep adjusting your wave counts. And it imposes an order on markets, wave 5 in way of the trend, 3 wave correction. it imposes an order that I do not believe is there. So I am quite anti Elliot wave. Not anti, I don't really care about it. But, as ever, if you make money from trading using Elliot wave, more power to your elbow. If you don't know anything about it, personally, I wouldn't expand too much effort in finding out about it. But there you go. That's me. Elliot wave, yeah, there you go. So swipe 650 in the comments. Elliot wave, they keep changing it when their prediction was wrong. That's it. Absolutely my experience of Elliot wave. So yeah, I'm not a fan of Elliot wave. There we go. Okay, that's it. Is that all the questions? So that's all the questions, and we're done. So like I say, no more trades for me this week. So I'm doing nothing the rest of today. But I think the market's going into next week. Stock markets, S&P, because of this big trend. Blah blah blah. Dollar index, because it's broken out. What's going to happen? Is this the start of a new move higher in the dollar index? And crude oil, because that has briefly broken out as well. Is this the start of a new trend higher? Or actually, is it the top in for oil? I'd say it's too early to call the top. God, excuse me. But let's see. Bit of divergence going on the RSI. For fans of divergence, we saw the market, the oil price hit a high here, pushed a bit higher again, but the RSI is making a lower high. So a bit of the old bearish divergence on that. So really interesting, but tough week for me this week, to say the least. But a profitable month in September, which is good, but not as profitable as I might have hoped it would have been a month ago. So we'll come back next week, do it all again, see where these markets are on next Friday, on the payrolls next Friday. To find out more about the other stuff I do, go and have a look at the website, davidjonestrading.co.uk. You can sign up for the newsletter, sign up for the WhatsApp group. Someone's just sneaked in a last minute request, so let's have a look at that. XMI, what's XMI? Is it an ETF? Oh yeah, the major market index, isn't it? Yeah, it's like, yeah. I don't know. XMI is the New York Stock Exchange major market index. Because I'm bullish on US stocks still at the moment, I'd have to be a buyer. I'd have to say I want to be a buyer, but I'd still probably rather buy the S&P. So yes, I don't know. If I was a buyer, I would go stops under at least 3,000 on the XMI, but it's not as pretty potentially as the S&P. Let's see. So yeah, interesting times. Let's see where we are this time next week. Any questions, you can go to the website and contact me through that, or you can email me, dj@davidjonestrading.co.uk. Otherwise, I'm done for the week. Have a good weekend. Good luck with your trading, and hope to see you next Friday.